20th, Wednesday, 2023. We're just a couple days away from, the holiday season here hitting this weekend with Christmas and then the following week, of course, with New Year. And I wanted to make this live stream to talk a little bit about the first time homebuyer process. What exactly is a first time homebuyer? What requirements, of course, are to be met by a first time homebuyer, and what different programs and incentives are available to them. So we'll dig in real quick here. I do believe one of the major, reasons and super important parts of me putting this together here before the end of the year is that we believe 2024 is going to be one of the biggest resurgences in the real estate industry here in the new year. Okay, we've recently seen in the mortgage world and the interest rate world, of course, with the announcement just last week that there will be no more upcoming Fed rate increases, and with a proposed 3 federal rate decreases coming in 2024, that we should, and we've already started seeing a nice cool down and decrease in market interest rates. So, interest rates have been one of the talking points, actually, probably the most popular talking point across the real estate mortgage industry, especially for home buyers here in 2023. A lot of that has to do with how we've seen, increases to interest rates, substantial increases over this last, especially 6 months, where it really hindered a lot of, especially first time home buyers, from being able to even pursue the dream of home ownership. Okay. With interest rates comes, affordability. Affordability is tied very, very closely to where market interest rates are, right? And as we see, of course, interest rates increase, that will eat into the buyer's affordability, uh, you know, ability to afford a certain amount of home. And when you can't afford a certain amount of home, or there aren't homes in that price range available, it does make things very difficult. So hold on one second. All right. So let's get into it. I wanted to, go through a few of these different, talking points, criterias. Realistically, talk a little bit about, you see, for the very first thing that I have written down here is who qualifies as a first-time home buyer. This is something that even with my real estate partners that I still have conversations about to this very day. So there seems to be a lot of confusion with exactly what is or who is a first-time home buyer. And just very, very simply, guys, extremely simply, by definition, a first time home buyer is somebody that has not owned real property in the last 36 months. Okay. So 3 years from today's exact date would mean if you have not owned a home in the last 3 years up to this very day, that would mean that you would qualify as a first time home buyer. Okay. If you owned a home 5 years ago, 10 years ago, 15 years ago, but you have not owned any real property in the last 36 months, you would qualify immediately as a first time home buyer. Okay. Now, first time home buyer meaning the specific first time home buyer programs that require you to be a first time home buyer that has not owned real property in the last 36 months. And why I bring that up is because a lot of people also have this misconception that a first time home buyer means FHA qualifying. Okay. And FHA is not specific to and available to only first time home buyers. What FHA allows for is for, especially in the past, what used to be the lowest down payment option available to home buyers, okay, in the way of the 3.5% down payment option. And that would require you to be buying a house as a primary residence that you're occupying as the owner. Okay. So an FHA loan or purchase or program does not mean that you're a first time home buyer or have to be a first time home buyer. With FHA, it needs to be for your primary residence and it needs to be owner occupied. And you'll see here across all of the other different first time homebuyer programs and different down payment options that I listed, that is always the requirement. That's a mandatory requirement across all of these programs is that you're buying as a primary residence and that you're occupying as the owner. So you need to be in the home within 60 days of the purchase. Okay. So very important. Now, again, remember FHA is not only for first time home buyers. You can be a repeat home buyer with FHA. We'll get into that here in just a minute, but FHA is not limited to only first time homebuyers. Okay. Now, we'll get into some specific details on the different programs that are available to first time homebuyers or different programs that allow for as little down payment as possible. Now, a lot of times when we're talking about or speaking about first time homebuyers, what we're talking about is a buyer looking to put as little down as possible. Okay. So, again, you do not want to get these things crisscross or confused, right? Because we're always trying to make things as simple and easy, as digestible as possible for our audience, right? Our audience being our real estate partners, our audience being our clients and home buyers, and of course, our audience for people, prospective buyers that are in the market that aren't even directly speaking to us yet. Right. So let's keep it simple. Let's make sure it's digestible. Right. So, a first time home buyer, again, let's recap real quick. You have not owned real property in 36 months. Okay. FHA is not limited to only first time homebuyers. Okay. It's just a type of program available for primary residence, owner occupied, and allows you to put a lower down payment down, 3.5% down. Now, here are some other options. Okay. Because as a first time homebuyer or for these lower down payment options, you could put as little as literally $0 down, right? If we're talking about our down payment grant program available or VA financing, where it's 100% financing and there is no down payment requirement, you are able to, in some of these situations, put down no money or, again, $0 out of pocket, right? Now, that is an option on those two specific programs. Again, if you're a veteran who has VA eligibility, if so, thank you for your service. We greatly appreciate you. We love working with our veterans and helping their homeownership dreams become a reality. You've earned it, you've deserved it. That VA eligibility is yours to take advantage of. In the way of the FHA down payment grant, that is a grant specific program, okay, where the grant funds are provided to you at closing and 100% immediately forgiven after closing. So there is no repayment term. Okay. So if you're talking about getting into a house with as little money as possible and you're not eligible for VA financing, you're not a veteran or have VA eligibility, that payment grant is there to allow and help make it happen. Okay. Now, specifically on the VA and FHA down payment grant. Okay. So, VA, again, the requirement would be, of course, obviously you have VA eligibility. We're able to source and secure a certificate of eligibility to verify the eligibility requirements. And then on VA specifically, they are not a one and done use. Term like most people believe, right? You can actually even have two VA home loans simultaneously with something called bonus entitlement. But just these two examples here is very, very important reason of why you, as a veteran, would make sure that you want to work with somebody in the mortgage and lending world that is familiar with a VA home loan. Okay. You want to work with somebody that understands what a VA benefit entails, what a VA home loan is, and all of the different moving parts. And of course, how to achieve success through VA financing. So you want to work with someone that's familiar with VA financing. Again, reach out to us. Of course, I'm always here to help. And we love working with our veterans. Thank you for your service again. Um, excuse me. With the FHA down payment grant, again, all you have to do is meet one of the specific requirements that the lender providing this grant has set forth. Okay. So I'm going to list off a few different requirements, only one of which has to be met. Okay. So on the FHA down payment grant, you need to either be a first time home buyer, you need to be a first responder or educator, or you need to be under 140% of your area median income level. Okay. So there is there's an area median income lookup tool, right? By Fannie Mae. If you look online for Fannie Mae area median income calculator, and you can type in your exact address where you live at right now, and it will tell you what the county area median income limit is. Okay. So if you take whatever that area median income limit is and you times it by 1.4, that'll give you 140% of that area median income level. And that will tell you where your income would need to be below to qualify for this program. So even if you were not a first-time homebuyer, even if you were not a first responder or educator, and you met this area median income level qualifier, that means that you qualify for the down payment grant program. So another reason why it's so attractive, why we utilize this program, is because of its flexibility. Again, it's not restricted to only first-time homebuyers. A lot of the times, that's the client or customer it's going to help the most. Of course, as first-time homebuyers are generally the ones that are looking for as much possible assistance with down payment, so on and so forth, but it is not restricted to only first-time homebuyers. So, we've had a lot of success with the down payment grant program here recently. Within the last 60 days, we've had two first-time homebuyers both get into their homes, not only with no down payment coming out of pocket, but they actually received an earnest money deposit refund at closing. Okay. So, what that means, just for you guys shopping in the market, looking to buy a house, when you secure a contract, right? When you submit your purchase agreement to the seller and contract, you're going to have something called earnest money deposit, right? So even if you're not putting any money down and you're getting all of your closing costs paid, there's still going to be a subject dollar amount of money that you're going to write into your contract called earnest money. That's the amount of money that it's going to take to secure the contractual negotiation between you and the seller that the title company will hold on to during the loan and purchase process, right? Now, my last two buyers that actually closed on the down payment grant program, they were lucky enough to have enough seller credit, right? Not only to have all of their down payment taken care of for them and immediately forgiven at closing, but they also received an earnest money refund at closing for that money that they actually put in the earnest money deposit, right? Because there was enough seller credit to refund them that difference as well. So it was a huge win. It's been a huge win for what would be buyers that originally thought purchasing a home and being a homeowner was impossible. Okay, my clients, when they tell me something is impossible, I never thought it would be possible, I never thought we could make it happen, I never even considered home ownership as a possibility, and then we make them a homeowner, right? Regardless of how we're doing it, but in this exact case as well, on this program where we're able to uh you know gather all of these wins for them. I mean, it's special, guys. Honestly, it really honestly is. And I do these things not to present to you as someone trying to sell you something, as someone trying to talk you into home ownership. That's not what I'm looking to do. That's not what these are made for, right? These are made for education, right? I feel like as a first-time homeowner, a lot of times, a lot of hurdles that we see are hurdles and roadblocks that are put in front of us by misinformation, right? Or people that may have purchased a home 10 years ago, 15 years ago, 20 years ago, when things were significantly different, and they don't understand the opportunities available to them in the current marketplace, right? So don't look at this and don't consume this content as a sales pitch or an advertisement to try to make you a homeowner. This is education to provide value to you, whether it's me or not trying to help you, but to open your eyes and mind to what possibilities are out there for you to make homeownership happen for you and your family. So I just wanted to kind of go over that again real quick because I'm very, very, very passionate about presenting and being available to you as a resource, okay? Not somebody trying to sell you something because again, it's not up to me to sell home ownership to somebody. It's definitely up to me to have it understood, to make sure it's beneficial to you and to get you through the process, but it's not up to me to sell you on that idea, okay? Now, let's continue. Let's talk a little bit about a conventional first time home buyer. Okay. So, just by definition, again, let me just explain what the difference is between VA, conventional, FHA. They are different. Um, so with FHA and VA, they're government insured programs. Okay, with FHA, you're insured by HUD. With VA, you're insured by VA the VA, and those loans specifically are insured by those government entities. Okay, so that's why you have different requirements, different criteria that you have to meet to qualify for those specific programs. With conventional financing, okay, now we're talking about Fannie Mae and Freddie Mac. Okay, those are the two secondary markets where conventional financing is serviced and sold. Okay. So with Fannie Mae and Freddie Mac, those are the two secondary market entities that make financing possible outside of some of the other either government insured entities or what we call non QM, uh, more portfolio investors. Okay. So, with conventional financing through Fannie Mae or Freddie Mac, you have first time homebuyer programs and options available to you down to 1%, generally up to 3%. Okay. Those would be what you would consider or call your first time homebuyer down payment programs available on conventional financing. Okay. Now, on conventional financing, again, you're going to run into you absolutely need to not have owned a home within the last 36 months. Okay. As a first time homebuyer for the programs. You need to, in some instances, with some of these different programs, you need to be under specific area median income levels. So, again, like we talked about previously with area median uh, income and different lookup tools, if you look up the Fannie Mae income median income lookup tool, you'll be able to Google it. Super, super simple. You type in your current address, it'll tell you what the area median income is for your area where you currently live. And then, of course, you can put in other addresses as well. But a lot of the first time home buyer programs with conventional do require you to meet different thresholds depending on the program you're using. So sometimes you need to be at 50% of the area median income level. Sometimes you need to be at 80%. And sometimes you don't need to meet an area median income level at all, as long as you meet the first time home buyer requirement. Okay. So, again, in this exact case, you'll have options available to you from 1 to 3% down. Okay. So, let's just real quick, let's have a conversation on how little amount of money that is that you need to come out of pocket in down payment funds to purchase a home. Okay. Now, unless you're purchasing a home, so on the 1% down exactly, that is up to $4,000 that they'll contribute to your down payment funds. Okay. So if you were purchasing a $200,000 house, you could exactly put 1% down because the other $4,000 would meet your minimum obligation to meet a 3% down payment. Okay. It's not exactly 1% if you're buying a home above 200,000. So we can talk a little bit more offline in your exact instance, in case, scenario, what you're looking to do, purchase price, all of that, to get exactly how much you would qualify for. But the absolute lowest down payment for conventional financing is 1%. Okay. But let's talk a little bit about 3% down, right? Because that's the most common first time homebuyer down payment option available, where we usually see our conventional qualifiers qualifying at. That's 3%. Okay. So, again, very, very simply, you can take any purchase price that you're considering. Okay. Let's just say, for example, it's a $400,000 house. You're going to multiply that by 0.03. Okay. 3%. 3% of 400,000, of course, is $12,000. $12,000 would be your minimum obligation requirement to purchase this home at 3% down as a home buyer. Okay. So we would know that you need a minimum of $12,000 in down payment funds, whether they're coming from your own funds or gift funds from a family member. This is another big conversation that I have a lot of the time with my first time homebuyers or homebuyers in general, but specifically for first time homebuyers when they have family members or blood relatives that are looking to gift them their down payment funds to help the dream of home ownership happen for them. So it's actually very common, and using gift funds is very easy to verify. Obviously, work with a professional and someone that's familiar with gift funds and how to document the source and the movement of those funds. But again, very, very simple, very easy, and very, very easy to accomplish. So, whether those 3% down payment funds are coming from your own verified assets, so we're talking about a checking account, savings account, investment account, 401k fund, The list goes on, or gift funds from a family member, blood relative, or someone looking to gift that money to you. Again, remember, it is a gift. It has to be a documented gift with no repayment tied to it whatsoever, but a gift. You'll be able to meet your 3% down payment requirement. Okay. So, outside of that, when I'm having these conversations with my first time homebuyers and when we're discussing, well, what am I going to need to, purchase this house? Of course, top of mind and always remember, down payment requirement is your minimum obligation, whether it's coming from you or gift funds from a family member. Now, the other out of pocket expenses that we may incur or that you'll need to keep top of mind throughout the buying process is your earnest money deposit. Again, you're almost always going to have an earnest money deposit, whether we're getting that refunded to you at closing or not, right? So you're going to need money available to secure the property in the purchase agreement, right? As far as your negotiations go. And you're going to need to meet or satisfy whatever closing costs are being quoted to you at closing. Okay. So that's what you'll see on your loan estimate in the box that says cash to close. Okay. Now, there's a very good possibility that, especially in today's market, in the market that we're currently in, where we have a lot of buyer leverage opportunity, right? And we're able to negotiate seller paid closing costs. A lot of these conversations that I'm having with my buyers, I'm able to calculate from the very, very beginning. If you negotiate this amount in seller paid closing costs, then this is the amount of money that you can expect needed at closing, almost exactly to the T. And we have that conversation before they start looking at properties. Okay. Why that's important is because you can look at specific properties. You can make very, very specific and deliberate negotiations and offers in your offers that you're sending to these sellers for a amount of seller paid closing costs that you know is going to take care of the rest of the amount of money that you're going to have due at closing. I want my buyers to try to get into these homes with as little out of pocket expense as possible, right? As long as we meet that minimum down payment obligation, how can we get you into this house with as little out of pocket expense as possible? Okay. That's done through knowing your numbers. Make sure that the mortgage expert that you're working with is calculating and putting these numbers in front of you from the very beginning, right? In writing, so you can see what they are. And so you know what to negotiate and how to accomplish that goal. And working with a real estate partner that's going to go out there and get it for you, right? That's going to go out there for you as a buyer on your behalf and make sure that we're aggressive in negotiating these closing costs, right? Because again, it's very, very possible to get you into that home with only the minimum obligation of the down payment. So that's what we always try to accomplish, of course, and try to get you down to that minimum obligation as much as possible. But it all comes down to communication and calculation, right? Let's get you in there from the very beginning, understanding what amount of money you need. Okay. Now, the last option with first time home buyers and down payments, and this is actually how my wife and I purchased our home in 2021 when we purchased our house together, our first home together, was we used a 5% down conventional loan option. Okay. Trust me, I would have loved to use 3%, right? I tried. Obviously, our company was the one that did the mortgage, right? So, but we, in our exact case, needed to put 5% down to help with qualifying reasons, right? So that would be one of the reasons why you wanted to or needed to put down a little bit more money, right? Obviously, 5% down is still a very low amount of money to purchase a home with, right? But sometimes with 5% down or a larger down payment option, that will reduce other items and factors attached to the affordability piece of that home. Okay. We'll talk a little bit more about that here in just a minute. And then of course what the cadence will look like once you become a homeowner and what your plan should be in 12 months, 24 months, 36 months after that. But that is the general wrap up of all of the different first time home buyer or low down payment options available today, right now, in this market that our buyers and clients have been succeeding with for years, and especially within those last 6 months, where we have a very buyer opportunistic market and we're able to negotiate these seller paid closing costs to help them with other closing cost expenses, etc. So I know, being a first time home buyer, a lot of that has to do with just having limited funds. You know what I mean? A lot of times, my clients that think or believe home ownership is impossible is because if you think back, right, depending on however, what your age is or where you're currently at in your financial life, right? Saving an extra $1,000, $1,500, $500, whatever the case may be for an extended period of time, month over month, is unachievable for a lot of people, or it seems impossible for a lot of people. And when you have that conversation with that person to say, well, hey, this is the dollar amount that you're going to need in just down payment, we'll take care, we're going to do everything that we can to help with the rest, whatever the case may be. Even that still makes it seem unattainable, right? So, in the way of the down payment grant program, where, okay, now we have a 3.5% down payment that's being provided for you at closing, immediately forgiven at closing, no repayment, so on and so forth, and an ability to go out there and attack in this market negotiating seller paid closing costs. It now, I don't want to say removes that hesitancy, but it allows for somebody's mind to open up to the idea of, oh, well, hey, I don't need to wait for the next 10 years to be able to buy a house so I can save up 5 or 10% down or whatever. It allows an opportunity for you to take advantage of a lot sooner than you believed, or if you even believed it at all. Okay. Another confusion with first time homebuyers or people trying to buy a house is that they don't realize that they can use 401k funds to purchase a home as long as it's your primary residence. Okay. So, a lot of times, if you have an active 401k or an old 401k where you can't access until retirement age, as long as you are purchasing a property for primary owner occupied residence and you can supply the evidence needed to that 401k holder for the home purchase, which of course will help with. A lot of times, those 401k funds can be accessed and used for down payment reasons and sometimes even closing costs for specifically the purchase of a primary residence. A lot of people don't know that. A lot of us have 401k funds or 401k accounts that we have that are old that maybe we've even forgot to roll over, and that money's just sitting there, right? But definitely possible. In the way of the veteran, right? I have a lot of veterans that don't even realize that they are, VA eligible, right? There's certain criteria, whether you're active duty or you're on reserves or you're retired. As long as you meet that certain criteria and we're able to pull a certificate of eligibility for your VA financing, right? A VA home loan is one of the easiest home loans to qualify for, right? On a VA home loan, you have a lot more lenient debt to income ratio calculations that we need to abide by, right? On certain programs, like for example, on conventional home loans, there is absolutely no way that on a conventional home loan will you ever be exceeding a 50.5% debt to income ratio, what we call back end, right? Which includes your total housing expense plus all of your minimum monthly debt obligations combined together. That would reflect more than 50.5% of your total income. Impossible. It's not going to happen on conventional financing, okay? For first time home buyers. On FHA, right? On a total max end debt to income ratio calculation, you will not be able to exceed a 56.99% total back end calculation. Again, your total housing expense plus your total minimum monthly debt that's appearing on your credit report combined, you definitely will not be able to exceed 56.99%. Now, with VA, that will entirely depend on two things: your current debt to income calculation and residual income. Okay. So, one of the best things with VA, especially if this is your first use or you have full entitlement, you'll be able to, with VA, purchase up to no purchase limit, right? VA, unlike conventional home loans and FHA home loans, they don't have to abide by county loan limits for purchase price, right? Which makes it really nice if you're trying to buy a house and can qualify for a home that exceeds the county loan limits, right? So that's another super nice thing about VA. but they're a lot more flexible and a lot more lenient with debt to income ratios and qualifying as long as you can meet residual income. Okay. They want to make sure that you're able to still support yourself month over month. So, VA, FHA, conventional, and FHA down payment grant. Okay. You have options available to you guys. As a first time homebuyer, or again, as we discussed here today, not even necessarily needing to be a first time home buyer on some of these programs, but as long as you're meeting the different qualifying criteria, speak with a professional, someone in your local mortgage world, in your community that is an expert and understands all of these different programs. Make sure that you are asking these questions and that you are being helped the way that you deserve to be helped. Okay. As a first time home buyer, there's a lot of delicate conversations, right? We want to make sure that we're keeping affordability top of mind. We want to always make sure that you're not making yourself house rich, cash poor. Very, very important, right? We want to make sure that you understand the responsibilities of a homeowner once you become a homeowner. Okay. So once you get your foot into that door, you're the new homeowner. What does that mean for you 6 months from now, 12 months from now, 24 months from now, 60 months from now, and then into the future? Right. There's a lot of different moving parts that it all just comes down to communication and education, guys. Again, do not use this or view this or consume this content or material with me trying to sell you something. Allow me to help you. Let me educate you. Let me be your partner along that journey every step of the way. That's going to help you not only qualify for these programs and become a first time homeowner, but that's going to be here to help you in the future as well. So I hope that helped, guys. It's been I think like 30 minutes. Yeah, 30 minutes, a little, nice little chat here, talk a little bit about some of these different first time homebuyer nuances, clear up some of the confusion with FHA programs only being for first time homebuyers, which again is not the case. Um, just make sure, again, use me as a resource, send me a message, shoot me an email, visit theescobedoteam.com. Again, I'm available to you guys day and night. Make sure, too, please do me a favor. We're trying to reach 2,500 subscribers on YouTube before the end of next year. Okay. 2,500 subscribers by the end of next year. Hopefully, that is an achievable goal, which actually I do believe that we're going to get it. Tran, what's up, buddy? I appreciate you popping in, man. No sweat. Maria, again, yes, phenomenal program, very, very beneficial to our community, and we will continue to, of course, make sure that we help these families win, right? Our community deserves it. So, all right, guys, it's been a pleasure. Mario with the Escobedo team, your local mortgage experts. Just remember, guys, who you partner with matters. Let our family help yours. Have a wonderful day, guys. Happy